Hello, everyone. Jesse Webb, Traders Pro. Market conditions mildly bearish in a bull market, meaning that our overall long-term uptrend is still intact here. From this move, this time frame that we're looking at here, this is a 20-year chart. This is 20 years. This upper chart is a 1-year chart. So we're looking at a 1-year trend momentum chart. So essentially we're looking at this little piece on this larger chart right here when we're looking at this upper level. When we have this crossover point at this area right here from red going back to green, that is that arrow right here. So our early entry trend location is denoted here. So you can focus on where we're at in the trend. We want to focus on two things. We want to focus on direction of the trend, and we want to focus on distance of the trend from that crossover point right here. And when we start to get up in these upper ranges, it starts to become unsustainable, just like the downside. So we want to see the distance of that trend extension, and then we want to see the direction of the trend extension. So we're currently moving up in this trend, this overall uptrend here, but we're definitely at that upper end of that range. So that's that long-term perspective. And the shorter-term perspective, then we can come back down. We know that we're in those upper ranges. Momentum has pulled back. We'll look at another chart on momentum, but it's pulling back to this kind of this halfway point right here where oftentimes we will find some support in momentum. Breadth and sentiment both in that upper range. So this is still bullish, meaning there's still a lot of bullishness in the market. There's not a lot of fear, and we're having a pullback within the positive breadth conditions of the market. So that's still a bullish state to be in right now when we're looking at the overall market conditions at this point. We have had quite a shift here in the buy-sell ratio, though. That's moved back pretty aggressively during this last downturn, where we saw the upper end of that range at 6, 7, and now we've pulled back to 1.3. So we're still above 1 on the buy-sell ratio, meaning that green is above red. But we knew that when we have this wide reading on buy-sell ratio, it's just unsustainable, and that's going to snap that trend back. So we'll see if we end up getting continuation this overall downtrend, or if we start to find some support on this overall bullish trend and start to work our way back up from here. Sentiment levels here, we looked at this overall extreme range back on December 19th, and we've just been moving back ever since, and that 50% line sitting right here pretty closely to where we're at right now on sentiment. If we take a look at a couple of charts here for the main market indices, we're seeing S&P 500 pulling back to on the 6-month time frame, pulling back closer to that momentum. It doesn't look like it, I might hold that 467 range. If it doesn't hold that 467 range, that 461 range on SPY is going to be coming into play here. We also have, if we take a look at TLT, which is the 20-year bond ETF, we can see that we're pulling back into that 95 or attempting that 95 range more than likely for some support. If we look a little bit longer time frame here on the 1-year time frame, we've got that resistance area. We knew that we were going to run into some pretty significant resistance right around here, just because of all this activity that the bond market had in the past. A really nice run up, now just retracing back. So watch that 95 zone here on TLT, and if we find some support on that, it's been essentially lockstep with what equities have been doing. This bond trend and that SPY trend have looked very, very similar. And so there's a lot of correlation right now between what bonds are doing and what equities ultimately are doing, just because of interest rates. And we're going to be dealing with inflation numbers and some of those things coming up again this week. If we take a look at let's look at sectors really quickly here, because we are getting quite a few sectors now that have moved back in a shorter term downtrend and then back to a hold. So they're kind of stuck now in that non-trending mode, which is fine. They're just retracing, pulling back, but we're getting a larger number of that. So this is also indicative of what the other indicators are telling us in terms of mildly bearish. We're seeing, the only sectors that we're seeing positive are really defensive type sectors: healthcare, utilities, financials, consumer goods, some telecom in there. This has got to start holding up right here at these levels, some support. We don't want to see too many of these starting to tick back into that downtrend, that sell zone. That's going to weaken the market even more. But this is early indication. This is what these trend shifts start to look like, from a really strong uptrend back to kind of a pausing trend to either a downtrend or finding support and moving back up again. If we take a look at a few leading stock ideas here from muscle stocks, we've got TAST, which has been a really great stock to trade this last 12 to 18 months, and looking like it's got wanting to break out to the upside, and some nice support in that upper momentum zone, some good consolidation there. MOD, also a really nice stock. It's in that auto, HVAC, does actually quite a few things, and a nice looking pattern here as well. And then one other one that I wanted to take a look at was Meta. So Meta has also been a really good leading stock, a 98 rank, surprisingly up 176% in the last 12 months. So it's you wouldn't have anticipated that out of Meta, but it's actually had a really big run for as huge of a company as it is. To have a percent move like that has been pretty impressive. That'll do it for today's update. If you don't have full access to the software, you can learn more at the link below in the description, and we look forward to having you. Have a fantastic day today.